interest in Ether trading comes ahead of Shapella, which is a portmanteau of Shanghai and Capella, two major Ethereum network upgrades that are expected to occur simultaneously on April 12th, coming up soon. So Shapella will allow investors to withdraw their Ether staked on the Ethereum blockchain. And our next guest has more on that. Chief Operating Officer for digital asset management firm Runa Digital Assets, Max Williams, joins us. Max, good morning. So you say that FTX and Sam Bankman-Fried quickly overshadowed Ethereum's last upgrade. So is it a crouching tiger, hidden dragon, so to speak?
Yeah, I think the merge was really the hot event entering last fall, and it was a resounding success, completed without any technical issues. And we got what we were expecting was either a disinflation or a deflationary network for Ether supply, and really trying to look at that from an investment sense of what does this mean for the network. And it kind of feels like profitability if you tie some parallels there to the fees generated by the network and the supply they issue. And that's what we got. But then quickly, with the events that unfolded at FTX, attention turned elsewhere. But under the scenes, we saw that success and have seen the network go deflationary after that, with increased activity once we kind of got the start to the new year and we turned the page on a rough 2022.
I think we have a chart on that. What has been the ETH supply since the merge?
Yeah, it's been deflationary, moving down. Yeah, you can see there. So you saw that, it was disinflationary, so we still had some positive supply right post-merge. But you see that dip, in that left side of that chart, that was FTX when I think there was a lot of on-chain activity. But then, halfway through where you start to see it go negative is when we got 2023 came. I think activity on-chain came back. And so we've seen, deflationary as those base fees burned have increased, but issuance has stayed the same.
So just kind of a more general question here for investors. Obviously, there's so much happening in the crypto markets right now. There's so much happening in the economy. How much do these specific developments, how much of an impact do they have on ETH's price, do you think?
Yeah, I think something like the inflation rate and the supply and the burn of Ether, I think that actually has a more direct impact to the price where, what happens when they burn is the base fees that users are paying as gas fees are then removed from the supply of the network. So as those users then go to replenish their gas fees to use the network more often, they're basically adding structural buy pressure back to the network of ETH. And so, on everything else being equal, as those users replenish their gas fees, you're adding buy pressure to the network, and that's kind of giving a soft bump to ETH's price. That's where we kind of look at that and try to build that income statement where you can tie the base fees by the network generated and kind of say, project out how's this going to have an impact on price.
Stepping back even further, can you give a quick breakdown for those who don't know, what the Shanghai and what the Capella update are all about?
Yeah, so this is the upgrade to allow withdrawals from staking ETH. So the Beacon chain launched in 2020, and there was basically a one-way deposit that you would lock up your ETH to the Beacon chain, participate in validating transactions, and earn rewards for doing so. But you had no liquidity to do so. You couldn't unstake those Ether tokens. But so they're now going to complete an upgrade that's going to basically bridge those Ether tokens you deposited back to the execution layer and back to your account should you want to withdraw those tokens. So a good upgrade, it basically de-risks the action of staking your Ether. So we're expecting a lot more participants to do so.
We have a chart on the ETH yield curve. What is the ETH staking yield outlook?
Yeah, so right now I think stakers are earning about 4 or 5%, depending on chain activity. It can spike up day to day. But as more people do stake their ETH, the amount of they're sharing in those base fees, those gas fees that are directed to stakers, they all share that pool. Issuance does creep up a little bit, so they each get a share of issuance. But as that staking rate increases, that yield curve will come down. So you'll see at about 60%, it's about 2.25. That's using current fees and including priority fees and MEV. So I think we're expecting somewhere in the 3% range. So it is going to come down as staking participation increases over the next 6 months or so.
Yeah, let's take a look at some daily active addresses. You predict a subsector that is already trending and will soon benefit from Shapella are layer 2s like Arbitrum and Optimism. Explain what you mean there.
Yeah, so layer 2s are, they're already doing well this year. As you can see that chart, that's the daily active addresses, especially for Arbitrum, who recently had their airdrop. But if you're looking at the roadmap of Ethereum, which we're really excited about, if you're looking at their roadmap, the merge was taking up a lot of attention of developers and almost all of their attention. But in the background, they're working on scaling Ethereum. That's kind of the next part of the roadmap, the surge. And part of that is reducing the fees that layer 2 networks use to store their transaction data on Ethereum. So that's what's going to happen in the next upgrade after Shapella. So we're kind of looking ahead to follow the developers that there's a big benefit here coming to layer 2s. They're already trending well, and the developers are going to shift their attention to improving the user experience on layer 2s.
Any big risks we should be aware of, like something that could go terribly wrong with Shapella that's on your radar?
Yeah, I think there's always technical risks, and the merge has been a technical upgrade unlike any other kind of we've seen in digital assets, but it has gone successfully so far. They've done 3 for Shapella. They've done 3 test upgrades on all the test nets. There has been a hiccup or 2, but I think they know the reasons why, and they're not expecting those same hiccups here on mainnet. So there is technical risk here, as always, but we feel it's pretty low, and the way they're doing it is a relatively low-risk manner. They're kind of not doing a bunch of activity on-chain. They're kind of going to move everybody's ETH on the state, so kind of make the transaction for everybody to simplify it. But as always, there's definitely technical risk.
All right, we'll be watching. Max, thanks so much for your analysis. That was Runa Digital Assets Chief Operating Officer, Max Williams.